This is Nishith Desai here, and the founder of Nishith Desai Associate. And I think Arvind was trying to tell you a little bit about the firm. I won't take too much time, but we are an international firm. We are India-centric global law firm with offices in Mumbai, Bangalore, Delhi, Palo Alto, Silicon Valley, and New York, Munich, Amsterdam, and Singapore. And we try to, most of our work is in the technology, media, entertainment, telecom, private equity, and healthcare and stuff like that. But we are a research-based law firm, and all of you can see our research campus on the back of myself. We have a campus where we think of future technologies and try to visualize the impact, regulatory, tax, ethical, strategic impact, and write a lot of papers around that and present to you all and try to shape the future of law that we want. And I do not want to go too long onto that, but we'll be discussing impact of Ukraine-Russia war on private equity in India, as well as some glimpse of what's happening around the world as well. We have excellent panel of speakers, and if I may just ask Joe to tell us a little bit about what do you see. I will be talking a little more later on, but for the time being, I'll stop here and have Joe make a presentation. And Joe, introduce yourself, and we are here to hear you.
Hey, Mr. Desai, thank you so very much. It's great to be here. And they say don't work with children, animals, or technology. And I feel for Arvind this evening. He's obviously had some challenges with his network there in Bombay. Thank you, Mr. Desai, for the invitation to be here this evening. My name's Joe Murphy. I head up the CAIR Association for the group based in Hong Kong across the Asia Pacific. I've worked in private markets here in Asia for the last 25 years, and I'm going to set the scene for this evening's session with a little bit of an insight on some of the statistics and the things that are happening around the world when we think about the alternative investments industry. Now, I think, I hope you can see my correct screen. Now, I think we can all agree that the landscape of why alternative investments have become quite so important is the fact that we're seeing investors recognize that diversification is a good thing. We want access to different forms of yield. We're looking to actually kind of protect our investments from an inflation hedge perspective. And of course, we want to get better returns and better performance. So all of the wins behind desire, appetite, interest in all things alternatives globally has never been greater. And that really is stemming this amazing acceleration of allocation into alternative investments, no longer just equities, fixed income and cash investments. We're looking at hedge funds, we're looking at private equity, venture capital, real assets, natural resources, a phenomenal growth of acceleration over the last decade. And in fact, that's now going to grow to some $23+ trillion by 2026, a magnificent growth that we're going to see over the next 4 or 5 years. But it's that big blue chunk of the actual chart there that excites us here this evening. What's going to be happening in that private equity and that venture capital landscape? For us here in the Asia Pacific is exceptionally good news. That trajectory, that CAGR of returns and growth we're going to see over the next 5 years equally is the best in the world. We're going to kind of outpace the growth in the Americas, across Europe and indeed Latin America, and really see a phenomenal growth across the Asia Pacific. And that's being stemmed by this. The 21st century belongs to Asia, most notably India and China, alongside the rest of Asia Pacific. If the 19th century belonged to the British Imperial, the 20th to the American, it really is here in the 21st century that everything is about Asia. And that GDP growth change that we saw back in 2020, it was really the start of all of that. And that's being developed and really kind of focused upon by this. We have over 800 million millennials across Asia, compared to just 66 million in the Americas and 60-odd million across Europe. There's a massive appetite to invest and perform and build one's own business. That entrepreneurial spirit really is a very, very strong thread within that millennial community. And again, with so many here in the region, we're in for some really exciting things. Side by side to that, we've got this phenomenal growth within the middle class sector. Now, of the next 10 billion middle class consumers we have around the world, 9 billion will be here in the Asia Pacific. So millennials and middle class are absolutely kind of pushing on why great things are going to be happening here in the Asia Pacific. Additionally, we have cities, massive concentrations of cities, over 300 of them across the region with over 1 million people, compared to just 10 in the Americas and some 18 in Europe. So again, this massive population density is going to provide some brilliant conditions for growth and some exciting things as far as the metropolitan influence of change for us here in Asia. Connectivity, we're mobile enabled, over 4 billion phone subscribers and over 2 billion internet users, absolutely kind of triggering, pardon me, some of the amazing innovation that we're seeing across the world as well. And again, particularly here in Asia, all of which really means we're going to have some phenomenal things happen here. This is making people think more about private markets versus public markets. There's some amazing growth to be had within private markets. And that's because companies are choosing to stay private for longer. More of that growth is really enjoyed for the investors who get involved in the company early, rather than what actually happens post that investment being IPO'd. When Google launched way back when, gosh, back in the 90s, they took in just $25 million of cash from private sources and raised $1.9 billion when they went public. By the time Uber listed, they'd taken on $22 billion of money in the private space. And it's really there where we're seeing this massive disconnect, this massive change, this massive opportunity about what's going to be happening across all things in the private market sector. For us here at Kaya, we think about content, we think about information, we think about knowledge. Most recently, we put out some research across 4 different quadrants across the alternative and the private market sector. And most notably, we just wrote a piece of research in conjunction with about a dozen authors, some from there in India and some from around the rest of the world, talking about the absolute rise of what's happening in the India private equity market. And I sum this up as saying this is absolutely India's era when we think about all things private equity and venture capital. That GDP growth is head, shoulders and torso above much of the rest of the world. That's going to make some phenomenal things happen within the private equity sector. That economic dividend that we hear so much about in the press is going to really have that youth over the coming decades, will again provide some phenomenal opportunities within the ecosystem of the Indian private markets, particularly the private equity and the venture capital sector. The growth locally has been exponential. If we saw what happened globally in alternatives, look at what's happened with the great work from SEBI, the regulator underpinning what's happening across the 8th sector there in India. We're seeing some amazing growth, particularly in 2021 and 2020. And I believe we're going to see something very similar as we look into the rest of 2022. Side by side to that, and this is really where I think the market is exciting, and I think our conversation tonight will get into a little bit more about this, is getting out. So yes, getting into the market is one thing, but crystallizing and getting your money out of the market is equally important. And within our report, we talk a lot about how 2021 was very much a defining year of receiving your cash and taking your money out of the Indian market. GlobalLogic, SB Energy, Paytm, some massive names that we saw there in 2021, which underlines why it was very much a defining year. Now, I love this little, I like words, and the actual collective noun for unicorns is blessings. So there were many blessings in India in 2021. We had over 70 new unicorns come through the market, and that's set to continue. Now, my takeaways before we go back to Arvind and the team to discuss this evening is, absolutely, India is expected to remain to be the fastest growing major economy over the next 5 years. That's really exciting for the all-time high number of both value and the volume of tickets coming through in the PE and VC space. The actual sectors of great dominance is healthcare, BFSI and IT. We're going to see that as well with that middle class coming through and that demographic groups changing. Right now, the number of unicorns is in the 3rd position behind China and the United States. I think that'll change this year as far as maybe even second or first position. But what's really interesting is not just the local attention to all things private equity and venture capital, it's that global attention as well. Now, of those unicorns that we saw come through last year, over 70% of that money came in from SoftBank, Tiger, and Sequoia. Those huge notable investors putting money to work there on the ground. And supporting all of this is a phenomenally robust, ever-evolving framework and infrastructure from the lawyers, from the accounting firms, from the regulator. I think we're in for a really exciting time over the months and years ahead. If you'd like a copy of the paper which we prepared, I co-authored with some colleagues as well. There's a QR code to download. And with Mr. Desai and his team's permission, we'll share that with you over the course of this evening as well. At that point, I will stop sharing my screen. And I look forward to becoming part of the conversation this evening. Thank you for those comments. And Mr. Desai, I pass back to you.
Oh, thank you very much. I think, can we just move on to Akhil? Would you like to come on the video now and talk to us?
Yeah, sure, Nishith. And well, Joe, I would compliment. That was a lovely start and a good background. Lots of information there in your presentation, and as usual, Nishith, I think you have put together the talk in a very in a great manner. I think the preamble has been great. So I'll introduce myself first. So Akhil Awasthi, I'm the managing partner of Tata Capital Growth Fund. As the name suggests, we are a private equity fund which is under the Tata umbrella, specifically under Tata Capital. We are a growth fund investor, so invest in businesses which have reached a point from where on we can see that the business is going to take off. We can use various jargons at this point of time, 3 times growth over a period of 5 years. But really, over the last 3 to 5 years, all the jargons and all the catchphrases that we had learned to market ourselves to whether to LPs or to potential promoters for investments, all of that has gone out because the world has changed so much, and much of it is what you have seen in the presentation, but a lot of it also to do with increasing emphasis on things like environmental and social, more emphasis on governance, more transparency, and of course the rapid formation and destruction of business models. Just let me telescope back a little bit into my firm for some more color. So we manage in Tata Capital, we manage now over $1 billion of assets under management across multiple funds. And what we do in Tata Capital Growth Fund is invest about $20 million. So $15 to $25 million is our sweet spot. Typically, invest in businesses which have also reached a run rate of about $10 million, and they could be in sectors which are quite diverse. They could be in healthcare, they could be in technology, they could be in financial services and consumer. What we tend to skirt around a little bit is infrastructure and real estate, and even there I am not so sure because digitization is actually making the earlier definitions of what is a capital efficient and an inefficient business redundant. We are based here out of Mumbai. And I, apart from Tata Capital, have a further track record of another 10 years with a firm called Bearings Private Equity, where I had worked prior to this, and essentially would love to have questions thrown at me on technology, on financial services, which are more of interest to me at this point of time. And of course, any other area. Some bit on where do I see things right now. Of course, much of it is in the headline. The systemic risk is at a high at this point of time, and not only due to the fact that we are at all-time highs in the market, and that market just refuses to go down, but also because of the fact that some of the risks which were suppressed earlier, I think, are coming to fore. While it is common knowledge about commodity cycle and commodity cycle being low and providing a profit edge to commodity importing countries like India, the other part is that the great deflation across the globe, which was essentially harbored or anchored around China's gigantic export machinery, that has now started to diminish in terms of incremental benefits, and even to an extent become a cause of inflation. So inflation across the globe, commodity prices being high, markets at being, I can call it cyclical peak, but I could be proven wrong next year when we hit another high. But definitely markets are high. It's a challenging time. But the interesting part is connectivity. The interesting part is that our demographic dividend is still intact. The interesting part is the zeal and the passion of Indian entrepreneurs, which still compel us to write all those checks that we do. So with that, I would like to pause at this point of time and participate in the conversation after we have gone round the table.
So thank you very much, Akhil. So nice to give a macro level perspective and the direction to a discussion. Thank you so much. Can I ask Shanu to now give us a little perspective as to what you see in Europe, and of course introduce yourself a little bit, but on a global basis, how do you see the scene unfolding? And you've been in the thick of the whole activity, because Europe is directly impacted in many ways from this war syndrome that's going on. And I don't know, Arvind, do you have to say anything? Or
yeah, you know what, as I planned, I will just briefly introduce Shanu Sherwani. I hope everybody can hear me now.
Yes.
Great. Okay. So Shanu Sherwani is the first Indian to be born in Luxembourg. And NDA is just delighted to be in touch with him. And the beauty is that he's got a whole lot of experience in private equity and venture capital across the European region, and even has looked at deals in India as well. His firm the firm he works for is called Antwerp Capital, which has AUM of estimated amount of about $5 billion. It also acts as a feeder fund. He's a board member of a Luxembourg-based entity. He specializes in private equity, M&A, and corporate finance. He's got a great background in KPMG. He has been the head of mergers and acquisitions, and he has been involved with top quartile private equity and real estate funds. The good news is that he's also a regular columnist in leading Luxembourg financial publications. And he recently wrote a beautiful piece on the implications of the Ukraine-Russia war on private equity. So over to you, Shanu.
Thank you. Thank you for a nice introduction. I think sitting here in Europe, we're asking the same questions as everybody else around the world in the private equity. What will be the impact of the Ukraine-Russian war? The immediate impact, as you will note, most funds in the US or in Europe don't have much direct impact or investments in Russia or in Ukraine. That's one fact. However, as you probably know, what is expected is a disruption in obviously the supply chains, the commodity prices already mentioned. You don't have to forget that Russia today has total assets roughly about 25 billion in private equity, which accounts for only 1.2% of the global emerging market. So the impact direct impact, I'd say, is very small. However, they are the considerable, I would say, producer of energy, commodities like palladium, platinum, wheat. This morning, I even read an article on the BBC saying there'll be disruption in the production of wheat or the exports of wheat, and India has a great part to play in that. But overall, the general feeling we have here in Europe is that we're waiting to see. It's wait and see. We know it's going to have an impact on the valuations, the next quarter valuations. We don't know the likely impact, but we have to be likely. It's really going to come from disruption of the supply chains. Apart from the energy, Ukraine, Russia is a main producer of semiconductors, the healthcare, commodities, etc. So they're very, very direct impact we can't assess yet. We know that valuations will go down in the portfolios, but it's just at the moment it's a matter of wait and see. This is really where we're looking at. Very important also, and I think this is for the holding. The private equity is a non-cyclical business. So today, private equity funds tend to stay longer in their investments. So we're not looking at the 3 to 5 years or 6 year. They stay 9 to 10 years with the continuation funds and the single asset funds. They're staying much longer in these firms. So they're not so much hit by cyclical. You usually have a very robust management team and the good GPs and the good private equity funds. So we'd already went through, I mean, we saw how the private equity funds reacted during the COVID crisis, which was remarkable and very quickly bounced back. I think similar, my opinion is similar, similar impact also on the Ukraine crisis that we are mentioning. I don't see it as much as a big crisis for the private equity. There is a lot of dry powder. Funds are raising, being invested more than ever before. Funds are coming to the market. You see the large funds, Blackstone, KKR, who usually came to the market every 5 years with their new funds. Now, every 3 years, they're raising. The mega funds are doing quite well. The mid-cap funds, which is where my sweet spot is, and I think also Akhil's sweet spot is, which I think is the sector which is going to grow the most, the mid-cap sector. They are deploying capital. There's a lot of capital to deploy. So I don't think that the disruption in supply chains as such is going to have such a big impact directly at the moment in private equity. It's a wait and see.
Okay, great.
So,
yes, Nishith Bhai, you were saying something.
sorry. No, I was going to comment a few things, but you can tell me if that's okay. Or
Yes, sir. It's okay. So please go ahead, sir.
No, I thought I will give a little lawyer's perspective that, and also how we are seeing things around the world and in India very quickly, not to take too many minutes at this point in time. But I think one thing that happened was that this war happened immediately after pandemic, and we thought pandemic will create a lot of havoc. But what happened was that, especially in the services sector and tech area, we saw a lot of activities, other activities. Supply chain, I personally feel India missed the boat during the pandemic, and I'm not sure how it is going to unfold itself. Again, China has been predominant player in that, but we couldn't take much advantage of that during pandemic. A third thing I see is that the defense expenditure, I believe, globally has gone, tripled or quadrupled, and where India's direction is going to be, because we are confronted at two borders, one on the Chinese side, one on the Pakistan side. We spend almost $60 billion on every year on defense, 15 billion on education, 10 billion on healthcare, 10 billion went up a little bit during pandemic. Now, if India's attention is going to be focused more on the defense, is India going to increase further budget? That will take away some money from education and some other kind of stuff. I don't know, but private investment is coming a lot in. So there is good opportunity for private investors in the education space, as we see. Also, we see that the bread basket, the Ukraine, even Russia, the wheat and other kind of stuff, that has come to some kind of a halt. So India has some opportunity in agro sector as well. But more than agro sector, I think in interesting opportunities could be in agro tech. I think, and some have done excellent job as well on that side. And India, I think, would do better in services sector than in manufacturing, because I'm not sure at this point in time. Of course, there is always a hope, and there are always opportunities, and so I'm not denying that. I'm not against manufacturing, but my feel is that there will be more opportunities in the services sector, And that area we are not really tapped enough. Our focus was to have manufacturing. I'm not against manufacturing, as I say once again, but the thing is that manufacturing has too many hurdles to cross. So seasoned entrepreneurs are able to take advantage of that, but the new entrepreneurs would have some difficulty. Again, regulatory framework and many other things that go with that. One needs to be a little mindful of that. And as far as private equity activities are concerned, there are a lot of them that's going on, and we see a very active, vibrant atmosphere. Yeah, so many unicorns, as was mentioned by Joe earlier. So it's very exciting. Other thing that we are looking at, the Ukraine, Russia, and even El Salvador have adopted crypto as an official currency. And what is going to be the impact on financial services sector? What's going to be on the banking sector? Because it is dual. One is a philosophical issue, because more and more people in the world want government not to engage in the printing of notes. Nixon dealing gold from dollars in 1971. And since that, in many governments have lost discipline of printing notes, and the easiest thing is to do that. So I think, again, what would be the impact of all this thing on inflation and stuff like that is something to be seen. Oil prices have gone up. Of course, India's import from Russia is only 1%, I'm told, as far as oil is concerned, but price overall have gone up. So, that's going to cause some kind of, I don't know whether we call it a disruption, but at least some kind of interruption in the ecosystem. So India will have to manage inflation. And lastly, I've also seen that rupee has gone down a little bit. So and net returns to the foreign investors would also have been impacted. And so on the one hand, in Indian rupee terms, it looks good. In dollar terms, fortunately, markets have been high, and so it is all absorbing all this impact. But those are some of the immediate things I see. I thought that this war will get over in 5 days' time. It's almost 50 days. And how long it is going to go, a lot of new equations are building up, and we have to see. But I think in India, one thing we really must do, and I'll stop after talking about it, we must really focus on our regulatory regime for new emerging areas of technologies. I think technology comes, but we are not ready, and a lot of work is being done around the world. So what happens is, as I told you in the beginning, that we focus a lot on futuristic technology, whether like blockchain and crypto we did in 2012, 13, IoT, drones. Drones is going to, in our view, create maximum employment opportunities, because unmanned drones are generally restricted. Every drone requires 2 people. Just as in last 5 years, delivery boys was the segment where maximum employment was created, if I'm not mistaken. And, so similarly, we expect that drones would take off, and our regulations are now much better than ever before. So I think that is another area. IoT, as I said, AR, VR, a lot of activity on metaverse that's going on, and we have been seeing, but we have to have some kind of regulatory regime. Real estate, Shan and Akhil, I think you will be able to talk a little bit more on that. But virtual real estate is costing more than the real estate, as you saw. So we are moving into the world that is very different. And Dubai has come up with the first law on metaverse, or the virtual real estate. Virtual real estate, I think rules are going to be still coming out. Now, Dubai has attracted huge amount of business, both not only in the crypto or the technology side, but that is another area, another jurisdiction to look for. And 3D printing, as you know, new protein, good protein, what is called, and all those kind of intriguing designer babies. And we have a lot of interesting things that is going to be there. As I mentioned, drones, I'm very bullish about it. And in next 5 years, in fact, we'll see flying cars, and 10 years time, it will be in 5 years time, it will be a reality, and 10 years time, it will be common mode of transport. And they will compete with usual infrastructure, just as in the US, airlines begin to compete with railways, and similarly in India also you'll see new landscape for the infrastructure projects as well, and mobility, convergence of that, electric car, lot of interesting things. But I believe India has more opportunity in the new emerging technologies, and I think we should be prepared for that. That would be my short exposition. I will stop here, Arvind, and please take it
Thank you.
over. Sorry
Thank
for my
you.
interruption.
No, that's fine.
I hope
That's
this will
fine.
set a tone for next round of discussion.
Okay, Mr. Nishith Desai, thank you so much. And one of the things you touched upon was crypto, and I now want to turn to the next speaker on crypto, and that's Mr. Suril Desai. Suril is a lawyer in Nishith Desai Associates. He's a fantastic individual with multiple skills. He's into not just law, but poetry, movie making, etc. Now, Suril, you recently met Brian Armstrong, the chairman of, founder and chairman of Coinbase. He was visiting India, and as you know, Coinbase Ventures and Andreessen Horowitz, which is A16Z, has made an investment in one of the startups in India in the crypto space. So what's the outlook? And there have been there are a lot of regulatory hurdles. If you could please take 1 minute and give us your thoughts on the scene for crypto investing in India.
I mean, uh, crypto in India is at a very unique juncture right now. The government recently has imposed 30% tax on all cryptocurrencies, earnings from all cryptocurrencies, and a 1% TDS on every transaction. And what that has resulted in is a massive brain drain from India to the other parts of the world. Most of the people in the crypto and the Web 3.0 space are moving out of the country. And at the same time, we have two unicorns in the crypto industry, CoinSwitch and CoinDCX. Both have had a sizable amount of investment from Sequoia and Tiger Global. On the ground, I mean, from what I have seen, there's mass adoption taking place in India. I mean, I have met auto rickshawalas who have gone and invested in crypto, which is, a good and a bad thing, because, you have people who don't understand the technology, but they're just speculating and coming in. But on the other side, we are seeing a lot of excitement, at least in the younger generation with crypto. And lastly, crypto, the main challenge is that there is a major regulatory challenge. The government is neither declaring it illegal nor is it declaring it legal. So it's in a limbo. So because of that, a lot of the trading volumes are going off exchange and becoming OTC trades, over the counter trades. And yeah, and the main drawback is that a lot of the crypto enthusiasts are leaving the country.
Okay. No, thank you so much. I guess it's due to the uncertainty around crypto regulations and the view of RBI. So I think we're still in a phase where India is trying to analyze whether or not it should integrate crypto in its overall investment, the instruments available for investment. But thank you so much. I'd like to go back to the first speaker, who was Joanne Murphy. Joanne, you made interesting comment about SEBI. And in that context, I'd like to ask you, what's the overall perspective when a foreign investor invests in a country? They want to see the stability of the regulatory framework. How sound is the framework? Can investments be made smoothly from overseas? Can investments be exited? What's your general, you meet a lot of people, investors in Hong Kong. What's the general opinion about India on the regulatory side?
Thanks, Arvind, and I smile because I think one thing that the world's not doing is kind of getting any lighter in the regulatory world. So there's lots going on, and I've been based in this Palo Alto for 25 years, and my first travel to India back in the mid-90s, and when I was working for an American bank at Morgan Stanley. And the regulatory landscape there was very different to what it is right now, and investors today see the India blueprint and the rule book and the regulatory framework that's in place as being a good deal more robust than it ever has been. So I think kudos to SEBI and the other regulatory groups there on the ground. And I think that's because the service intermediaries, the lawyers, the accounting firms, the valuation agents, etc., have gotten a good deal more established and a good deal more rounded in recent years. But just touching back on the point on crypto, I was thinking actually about the regulatory framework. One thing I think India might give some thought to, and where I think as a foreigner from the outside looking in, is many jurisdictions have provided these kind of regulatory sandboxes whereby come in, play around, do what you want to do, develop, innovate, be flexible and grow, and there'll be no kind of problems or issues behind you. And I think that's something where India would do well to give some further thought to, because I think that talent drain across different sectors will be very real if we don't see that robustness and opening up of some of the regulatory framework. We're going to see some issues there. But kudos where kudos is due. I think there's been some great work made and some great strides taken, but I think there's still more to do.
Thank you, Joe. Nishith Desai, so you raised your hand. You have a point.
Only one comment quickly on regulatory sandbox. In fact, India has, we worked right from its conceptual framework, Gift City, which is called, it's a new international financial services center which has come up in India. Very, very progressive, very dynamic, and very fast in recent times, And I had discussions with the chairman at one time on the crypto, and I think they are positively looking at creating, they have a sandbox regime, and I think that's where we are now working on. I think, so there is a mechanism, even RBI also can do it, but things take a little longer time there. But as far as Gift City is concerned, at least in the context of non-residents, this sandbox can work very well, and that can help us to develop some kind of a framework. Shan, I see you want to speak a word, or I?
So me and
okay, no problem. So I think
I'm more into private equity.
And, yeah. But I think there are a lot of
question this morning of one of our LPs. This morning wanted to invest through crypto in one of our funds, but none of depository banks in Luxembourg would accept yet crypto as an investment in a fund. I think it's pretty similar everywhere around the world. So it's a non-subject for Luxembourg, right? But I would say Luxembourg being a hub for private equity worldwide in terms of their structures, I think it's a common sentiment I have. I'm talking about the private equity sector.
I personally feel that the next phase or inflection point is likely to come in, because now institutions are likely to enter the crypto space, whether Goldman Sachs or JP Morgan or others, So once institutions enter the space, I think the landscape would begin to change again. Now, so everywhere there is some regulatory uncertainty, but at the same time, everybody is also recognizing the benefits of blockchain and crypto as a as a major instrument of financial change. And with all this war, there's a lot of uncertainty on the currency future, and therefore the crypto, there are so many different types of cryptos, and particular bitcoins, Ethereum, and stuff like that would begin to get more and more traction. Anyway, I think that's what on the crypto end.
Okay, I'd like to switch to Akhil. Hello, Akhil. You made some very interesting comments, and you said you're looking at, you're a very highly respected private equity fund general partner. I had a question for you. You did mention two areas that you are sort of considering or looking at for opportunities. One is the tech space, and the other you said was financial services, let's put it. I just want to delve a little bit deeper. If you could delve a little bit deeper and say, look, what are you finding of interest in the tech space to invest in India as a private equity fund? What are you finding of interest in the financial services space? If you could dwell a little bit on that, would be really nice.
Sure. Thanks, Arvind. And I do have one point of view on blockchain, not so much crypto, but I'll put it towards the end. Let me just address what you have asked me specifically. So we ask ourselves always, this question that the business that I invest in, what it can do for India, and the other is what it can do for the world. And surprisingly, as far as technology is concerned, we come up with two different answers. So as far as what we can do for the world, it's primarily play on the follow through or the wake of the explosion of the kinds of data, the amount of data, and what you can do with data. So native proficiency in mathematics, number of engineers, again, the old IT story, but in a very different context. Instead of trying to enable information flow seamlessly through, this is trying to make sense of the information to deal with either business problems or to see future opportunities in what the data set is telling us. So essentially around analytic related services, analytic related design, especially in engineering services. We are a big investor in Tata Technologies, for example, which is designing future design for electric cars and exactly how that will play out, using, amongst other things, a lot of analytical inputs. So that is one part, and that is on the engineering and technology side. Similarly, data would play a role, whether you say in credit assessment or whether you say on healthcare services. But that is on the export of services kind of umbrella. The other part that we say is what it can do for India. And in India, we have made tremendous progress over the last 20 years. And you would have all noted today that World Bank has come up and said that extreme poverty in India is at a record low, and it's if my memory serves me right, it's just close to double-digit numbers, between 10 and 15% now. The market is not as underdeveloped, but still there are pockets of opportunity. So when I look at successes, all the unicorns that were there on the nice slide that Joe showed to us, I say, why is Byju's so successful? And answer is, to my mind, is that there was a huge tuition unorganized tuition teacher market in India, after school tuitions provided to children. And that has become organized. So technology has enabled organization of what was previously an unorganized market, just in the same manner as Uber had organized under a corporate entity what was earlier an individual taxi or a small taxi cab market. Now this can go in many areas. It is going right now, and for example, in healthcare, it is integrating the healthcare chain. In fact, this disruption and creation in healthcare is at such an amazing level that it is just fascinating to watch, and how it will create fresh value for consumers. We have seen some of it in the supply chain. Now that's more B2B, but from the accessibility of credit to reduction in business inefficiencies due to just the nature, the way the business is done in small mom and pop stores or in small towns. The use of technology to make that entire process more efficient will essentially relate to higher growth of businesses, and would relate to would lead to creation of business models which are investable by private equity, and which, just like our insurance industry, with our insurance agents getting organized under digital platforms. So that's the fascinating part I like in technology, in the domestic side, how unorganized one-off businesses are coming together under an umbrella, coming together with a sense of corporate governance, with a sense of consumer services, and becoming a better proposition, even at the same value point, and yet generating shareholder returns.
Thank you so much, Akhil. I think that's fascinating, the way you described your investment approach. You look at a number of things, which include corporate governance. You even said, what does it do for India? I think it really resonates very well with the not just with the Indian portfolio companies, but will also resonate very well with LPs and other stakeholders. Thank you so much, Akhil. At this point, I'd like to invite Vaibhav Parekh. Vaibhav has joined us from New York. And look, Vaibhav, I just wanted to ask you if you have any comments. You can take a minute. If you have any perspective about investing in India, looking at it from, from the vantage point of investors in New York, that will be so nice.
Thank you, Arvind, and thank you, everybody. I hope you can see and hear me well. I will just take a minute. What I'm seeing here in the US is, last couple of years, because of COVID, we saw a lot of excitement as an offshoot of digitizing and using digital technologies to enable efficient remote working or enable efficient operations of the corporations. And what I realize is that every issues bring opportunities, right? So whether it is the climate issues which is coming up, or the Russia-Ukraine war, COVID, everything has got really some silver lining in terms of an opportunity. And what I'm currently seeing, because of the ESG and the climate change, there is a lot of focus on climate tech and agri-tech, and that's where I feel there will be a lot of opportunities even in India, because of the way the urgency or the importance of climate change has come in, and how technology will be used to improve efficiencies. And when Akhil was talking about unorganized sector being organized, I immediately connected agri-tech. From that perspective, you really see agriculture is very unorganized in India, and this whole chain on agri-technologies will, in my mind, become very important. So what I'm seeing here is a lot of talk on climate tech. Also, because of Russia-Ukraine war, the increase in petrol prices is again bringing opportunities. We will see how that leads to increase in private equity, on not relying on petrol again as the criteria. And again, when you merge it with climate tech, having less reliance on petrol or gas and oil and gas related opportunities, and going towards renewables and newer technologies on that side. And the other thing which is something which you're seeing is there is a convergence. And Akhil talked about analytics, right? So AI is very, very important. Now AI is actually permeating everywhere in all different areas of technologies. And when you are merging different technologies and creating new opportunities, so AI with blockchain, with AR VR is creating metaverse, and then AI with 3G or 5G, and with IoT is creating the different areas. So the different opportunities being created because of convergence, and this is where I am seeing a lot of trend of people coming with unique ideas by merging different technologies and creating opportunities.
Thank you, Vaibhav. Really appreciate that. Now, I have a question from the audience, and it's a very nice question, which must be.
We can extend the program by about 5-10 minutes. We started late because of technological.
Yeah. Because we have to deal with we have to address some of the questions from the audience. And there's one really nice question that's come. Of course, all of them are nice. And this one we haven't addressed yet. So, perhaps Akhil and Nishith might address it, Vaibhav might address it. So here's the question. Do we see any other private equity opportunities leveraging the bottom of the pyramid approach and creating a win-win scenario for investors and underprivileged, especially in an Indian context? So the focus here on this question is, what are the investment opportunities for private equity, that cater to bottom of the pyramid solutions and really help the underprivileged societies in India? So maybe, Akhil, you want to take a crack at this?
Sure,
Nishith?
I can give it a try. So till about 7-8 years ago, when we used to talk about when we were investing our earlier fund, when we used to talk about serving bottom of pyramid at the expected returns that our international LPs expected of our fund, largely we were confined to industries like microfinance, which had for a variety of reasons, had the economics that could generate returns which were attractive. Today, what I'm seeing is that because of technology, we are able to assess risks at a micro level much better. And this is aided by the surplus of capital. So in one way, Nishith, when we were talking about printing of money, it has reduced the cost of capital. So there is a certain amount of capital investment that goes into servicing any strata of customers. Now, if you talk about diagnostics, the cost of diagnostics, getting a simple CAT scan is moving down from like $100 to $50. And partly that is based on availability of machines at a cheaper cost, but partly also based on the fact that you can advertise this price across the city, and people actually in a town like Mumbai prefer to travel 1 hour to save that $50. So they will come on a train and they will get the CAT scan done and take benefit of the lower prices. So just dissemination of that information is and a lower cost of capital is enabling servicing of that customer. Similarly, of course, in affordable credit for unorganized sector or small businesses, again, because of supply chain related companies coming in with additional finance, we can see that they were earlier effectively at the mercy of their distributor or a small time money lender, charging them 2.5% to 4.5% a month. Today, they are able to access credit at a much more competitive cost. So this is what I'm seeing specifically benefiting lower strata of the economy, but also providing credible business models that private equity can invest in.
Yeah. So
Thank you so much.
Very quickly, one or two words here. One, we have seen maximum investment and maximum interest in impact investing. I think this is basically, based on the premise to help what C.K. Prahlad called bottom of the pyramid. And so I think the orientation is there to create an impact and large scale impact. Second thing that we have been deeply involved is in creating new instruments of financing, innovating new instruments of financing, including, for example, quite a few instruments for outcome funding. So when bottom of the pyramid, a lot of monies go, but really they reach or not, what is the result? I think that becomes important. So we are working on what is called outcome funding, and those models are coming up. Third is that the thrust on using technology, and particularly I think next 5 years, I believe even quantum computing will become very prominent, and a lot of computing will go to ease the cost of business. Only other concern I have is that whether this war and the oil and other kind of stuff is going to increase the inflation, and that will increase the cost of financing, and whether the same money will buy the same thing is something that is a matter of concern. We need to do something about it. And as I mentioned, there is huge opportunity because I think government attention may go more towards defense or security or whatever it is, may have lesser money for other purposes. So private sector has, and private equity has a lot of opportunity in healthcare and the TMT sector overall. I don't know about 5G. We have done a lot of work around that, but it will go through some hiccups because of the radiation, some other issues. But that will also help us to reach out to people in many ways. So there's pluses and minuses which we need to really consider that. I'm sorry I went on a little long, but
thank you.
Yeah.
Thank you very much. And now, questions are coming in. We'll take a couple more. So here's a sort of very legal question. do we really need a codified law for cryptos and NFT? And even if we get such a law, how will the jurisdiction be divided between courts, NCLT, SEBI, and others? Maybe Nishith Bhai, you want to address it, or maybe Suril can address this.
I'll just say one thing, that we have done a lot of work in this area, and one recommendation we have made is to set up crypto regulatory and development authority, because a lot of new things are happening. The initial suggestion was to have SEBI handle this, but again, SEBI would have enough bandwidth or focus on this issue, which is emerging technology. So I think like insurance or other regulatory and development authority, we should have a crypto regulatory authority, because it will have to be dynamic. Constantly new things are going to come up, new issues. So somebody will have to address that. So that would be my quick answer to that. And if Suril, you have 30 seconds to say something, you can say.
Yeah, no, I mean, crypto is by nature is decentralization. So we are entering this whole new phase where uh, power is getting decentralized, and which because there's not going to be any clarity on a global consensus on crypto. So to have who because the whole ecosystem is so decentralized, and it's so it's just been 13 years since crypto came into play, and it has really, when it came, nobody thought it would become such a powerhouse. It was just a bunch of geeks who were playing around with what we call nerd money, and it was just cryptographic information that was just being played around with, and suddenly it became uh, it just grew, and the millennials and the younger generation really adopted to it. And now there is this whole, traditional finance versus cryptographic finance. And so, I mean, it would be very difficult for a particular institution to really control crypto, even though they would say that, it's going to be very difficult. It's like who controls the internet. It'll be a question like that. So that's what I'd like to say.
Thank you.
So
I think we have
quickly,
time for only
the
one.
technology cannot be regulated because that's different, but the players and the activities we need to be regulated. That would be my answer. So,
Thank you.
and we have a lot of laws in place. We have already handled in last 8-10 years different situations, including the Ponzi schemes and the frauds and police cases and anonymity issues, and all those things have been, often we have encountered. I think Akhil wants to say something, and then we can
I
move
just
on.
want to say one sentence, Nishith, and thanks for the opportunity. I think crypto has to really figure out whether it is an asset or it is a monetary unit. I don't think both is possible. If it's monetary unit, it will be regulated. If it's a asset, it is possible that it may not be regulated and it can be fully in a free world.
Okay, I think we have time for maybe just one more question. So I think, Akhil, you are the best person to answer this. What this question is saying is that, reputable funds have invested in startups and accounting frauds, and governance issues have surfaced. And the question is, what checks PE funds should keep? By PE funds, I think this questioner means venture capital funds. What checks should venture capital funds have before investing in any startups, keeping these governance risks in mind?
So it's not a short answer to that. It's a very, very long answer. Quick thoughts. Private equity or venture capital investment in a company comes with the duty to make governance more robust, set up a systems, policies, and make sure that the company becomes, should it scale up to, ultimately become a Google or even bigger, it is actually a responsible corporate citizen, which is what a society needs. So the purpose is not merely just to invest and then flip the transaction 3 years later. We typically have 3 to 4 portfolio companies per investment professional, and the reason is that is simply impossible for an individual to manage more companies than that while paying attention to these issues, which are really niggling and take up a lot of time. So I think that is what my thought on that is. Private equity, because of the humongous growth, may have taken their eyes off the ball in certain cases, inadvertently or maybe just due to the pace of transactions. But now the time has come to actually get back to the original premise and make sure these companies grow up to be great corporate citizens as well as great financial successes.
Thank you, Akhil. Thank you. We are coming to the end of the. Oh, sorry, Nishith Bhai, you have a point. We cannot hear you, Nishith Bhai.
Only one line on ESG from a legal perspective. In next 5 years, we'll see a lot of litigation on ESG because stakeholders are going to come up, and I think this is one most important thing which all the board need to be bearing in mind and understand the risk of not getting into ESG. Today, it is a nice thing to say. I think tomorrow it is going to be a must. Today it's nice, tomorrow it's going to be a must. I think this is small message I'm wanting to give so that all of us are a bit more conscious of that. You all know about it, I know.
Thank you, everybody. I really appreciate it. Just want to inform the audience and everybody on this particular webinar right now that Nishith Desai Associates is coming up with 6 more webinars in the next few days. After 2 days, we have a webinar on fund formation. We then have a webinar on ESG, all connected with private equity, on tax indemnity issues, on things like exits. So do not miss these. And I'd like to, at this point, thank everybody in the audience and thank our honored speakers and panelists for attending this and sharing your valuable insights. Thank you, everybody.